Hey there candlestick traders, Lance Beggs here from yourtradingcoach.com. Welcome to another video in our short series working our way through the single candlestick patterns. Today we're going to look at the hanging man pattern. The hanging man is a bearish reversal pattern that consists of only one candle as displayed in the video here. So named obviously due to the way it looks, with the head up here at the top of the candle and the body hanging down below. The real body can be either colour, red or green. As with the shooting star, the red body is slightly more bearish than the green, and I'll demonstrate that shortly when we discuss the psychology or sentiment of the pattern. The lower shadow is at least 2 times the size of the real body, and ideally there's no shadow above the candle. However, a very small shadow can be acceptable. The setup leading into a valid hanging man reversal pattern must be an uptrend. If you don't have an uptrend, then it's not a valid pattern. And ideally, if we're sticking again with strict textbook definitions, we'll see a gap up from the close of the preceding candle to the open of the hanging man candle. Of course, this won't apply on continuous markets such as Forex. Confirmation of the trade will be price trading below the candlestick pattern. The level of confirmation required will vary depending on the trader's risk profile. Aggressive traders may enter as soon as price moves below the hanging man low, down here. More conservative traders may wait for a close of the candle below the low. Others may wait for a complete real body or even complete candle below the low of the hanging man candle. Use whatever works for you in your back testing. So which of these are hanging man patterns and which aren't? Well, all exist at the top of an uptrend. All have lower shadow greater than 2 times the size of the real body, with confirmation of price trading below the lows. So all of them are valid hanging man patterns. Let's look at the psychology of the pattern now to see who is in control, the bulls or the bears. The uptrend initially appears to continue strongly as price gaps up at the open to open here. At this stage everything is looking bullish. However, the bears then fight back strongly, driving price convincingly lower. However, leading into the close, the bulls are then able to reassert their authority, closing back in the top third of the candle. So are the bulls still in control, or has their confidence been shaken by the display of strength from the bears? To answer that question, we need to see confirmation through price trading below the low of the hanging man candle. Confirmation will alert us to a potential change of sentiment. The bulls were obviously shaken. Their attempt to keep prices higher was not sustainable, and the bears have regained the upper hand. Depending on your trading plan, this might be an opportunity to plan an exit if you'd been long leading up to the hanging man pattern, or to enter short if waiting, for example, for evidence of a stall at an area of resistance for a trade in this direction here. Like the shooting star, a red hanging man is more bearish than a green hanging man, due in this case to the bull's inability to force the close of the candle up to new highs. Notice here on the red candle, price opens at the high, moves to the low, and the bulls were not quite able to drive prices back up to the high at the close. However, the green candle opens here, price is driven all the way down to the lows, and then the bulls were able to drive price back up above where it opened to close at new highs. So the red hanging man displays more bearish sentiment, while the green pattern is not quite as bearish. So here's something new for you. Which pattern is more bearish, a hanging man or a shooting star? In the shooting star here on the right, price achieved new highs and looked very bullish, but was then driven back down to close near the lows. Likewise in the hanging man on the left, price achieved new highs and looked very bullish, was then driven down to the lows, but in this case, unlike the shooting star, the bulls were able to reassert some of their dominance in pushing price back up into the top third. Typically then, a shooting star is considered more bearish than a hanging man, due to the bears finishing this tug of war as the dominant force. Let's look at 2 examples. Firstly, in the daily Forex chart, British pound US dollar, we have an uptrend leading right to a red hanging man candle at the top here. The lower shadow or tail is greater than 2 times the range of the real body, showing potential strength in the bears in probing lower prices. Confirmation was price trading below the low of the hanging man here, leading to a change in trend, in this case a halting of the uptrend and a change to a sideways range with a slight downward bias. This is a great reminder of the fact that a candlestick reversal pattern does not necessarily reverse price. It's poorly named. A candlestick reversal pattern simply shows a higher probability of changing the trend, possibly to the opposite direction, possibly to a sideways trend. Be aware though that there are no guarantees. We deal with probabilities in trading, so you always need to operate with appropriate position sizing and risk management to ensure safety of your account at all times. Notice well that a reversal pattern can be useful for both entry or exit. Entry in this case short if we're trading the reversal, the trigger being for example confirmation through price closing below the low of the hanging man candle, or exit long if we're trading the trend upwards, perhaps tightening up our stops right below the pattern upon sighting the hanging man candle. And check out this crude oil 4-hour chart. This is a great example. We have an uptrend, a retracement, and a retest of the highs with price stalling at the double top. What's right at the top? A very small range hanging man. The small range is fine. It also has a small upper shadow, which is fine. And it's followed by a shooting star, which you'll recall from the last video. So we have a test of previous high, failing on a hanging man, followed by a shooting star. How cool is that? 2 bearish reversal patterns confirming a double top. And what does it lead to? A great reversal trade in the short direction. Well, once again, that's all folks. Coming up in the next video, we'll continue with the single reversal patterns, looking at the hammer. In the meantime though, open up your charting package with your favourite stock, index, commodity or currency chart, and see if you can find any hanging man patterns at the top of an uptrend, leading to either a halting of that trend or a complete reversal. I'm Lance Beggs from yourtradingcoach.com, wishing you happy candlestick trading and many profitable hanging man reversal patterns.